Welcome back to Smart Money. This is our special segment, Future Female Forward, where we're talking to a woman achiever who has been in the industry of finance for over 20 years and is trying to teach us some lessons so that, we can inculcate these habits and grow our corpus as well and achieve all our financial goals. Ayshwarya Desikan of HSBC is with us. Ayshwarya, you've really thrown some truth bombs at us, right? What one should be doing and not doing with your portfolio. Let's move to lesson number 4, which is be dispassionate about your investment. This is very hard. Trust me, because a lot of times your ego and your emotions come in the way. Oh, this stock has given me great returns. Now maybe I should hold on a little bit more and not cut my losses. But when you talk about being dispassionate, what do you mean?
So you hit the nail, right? I think as human beings, we are a bundle of emotions, and that does play a part in every decision that we take. Not very different in how we behave in the financial markets or what we take decisions on the stock. Now here, when I say dispassionate, two things, right? One, we need to understand where are we getting sentimental about something and take those calls. So basically, like, if assuming you bought a house and it served a purpose, it's your first investment, whatever, but there are times when you realize that that asset is no longer serving your purpose. The cost of maintenance is very high, considering the appreciation value that you might get from it. So evaluating the cost of holding that asset and evaluating the cost of letting go and the opportunity that is otherwise available also becomes very, very important. So that decision to let go is extremely essential. It might sound very philosophical, I guess, and we always battle with it.
No, it doesn't. It really resonates with me because there was a time a couple of years ago where I had two options, whether to buy a house or to invest in equities. And, because owning a house is sort of like, it gives you that little bit of power as well, that you own an asset. But eventually I realized that investing in equities is giving me far better returns. So I take your point. Go ahead.
The second one, I would say, honestly, Sonia, is also about the ego that comes in, right?
Yeah.
A lot of times, that is really what derails people's portfolios. You like a stock, you buy it, and then there is a correction. Now, it could be something which is just a market-driven correction or a cyclical correction, or it could be something fundamentally wrong with that company or that particular investment class that you're invested into. That differentiation becomes extremely important. So you take a recent example of a bank stock which went up to 383. There were issues in the bank which was called out and it fell down to 150. The people who held it were still buying. It went to 50, you were still buying.
Are you talking about Yes Bank?
So there are people who are telling you that I'm averaging my buy, right?
Yeah.
I bought at 380, let me buy it at 150. I bought it even at 10 rupees.
Yeah.
So, now, what is the cost? How long is it going to take for it to bounce back? And
the opportunity
cost of what else you're losing out because of just feeding into this because you don't want to let go. I think that differentiation becomes critical, which ties into the earlier point that you were talking about, right? I think when you have a financial advisor, they are able to spotlight these blind spots for you.
Yeah.
If you don't have that, then, you are doing it all on your own.
And they're also able to cut the emotions out of the picture, right? Because it's not their house or it's not their asset or their stock that they're selling.
Absolutely. It's easier to manage other people's money than your own at any point in time for everyone, right?
It's like a doctor, right? I mean, it's easier to do surgery on a random person than on your own child. So I take your point. Okay. The next lesson and the fifth lesson, I want to spend a little bit of time here, is price versus quality. Now, this is important because, in today's stock market, it's become increasingly hard to find good prices. There's great quality businesses, but prices are not available. What do you do at a time like this?
So that's why I think understanding the basics in terms of some fundamental, is important. Second thing is the price is always about what is the value rather than the price. And if that valuation is reasonable for a future appreciation or a future potential in terms of what you're looking for, I think then it's a good price to buy. But if not, is when there is a problem. So it is not about something being expensive or not being expensive, right? If something has probably had a track record, even in mutual funds, people have this, right? That should I buy it at NFO because it's a 10 rupee NAV?
Yeah.
Should I buy it because it became 8, 9, it fell? Or should I buy it later, it has become expensive? That's not the point. If it has got a track record, if the fundamentals are right, if someone is really managing that asset class and you know that the future potential is very much in line, I think that is the decision that you take. But if that is not the case, and then you are looking at something and buying it just because someone else has made money, those are the ones which really become traps for you in the long run.
Okay. I had a couple of more questions before we wrap up the show, and I'm really sad to end this show because I'm learning so much from you. One thing that I've always, this debate I've always had is active versus passive, right? I mean, I'm a staunch believer of passive funds because I think that in passive funds, you're removing a lot of the biases, human, familiarity bias, all of that. But you tell me, from someone who's been in the market for maybe 25 years now, where have you got the best returns?
It's a combination.
Okay.
Because there are certain, especially when you look at a mid-cap or a small cap and all of that, right? There are those fund managers and asset management companies which really take research seriously. They really build fundamentally good portfolios, and the barometer for evaluating them is how they have done vis-a-vis the index itself.
So who are the fund managers lately?
So, I mean, there are quite a few of them. And in fact, in HSBC itself, right, we actually work with a set of approved fund houses and fund managers, which we are comfortable with. And we do a lot of internal research from the bank also to say that what is the track record? Is it return by chance, or is it something that is actually research backed? What is driving it? Now, everyone makes mistakes. You do go through those cycles. But predominantly, are you able to evaluate whether there is a system behind these emotions which is able to track it? And if that system is in place, and most of the fund houses have that today, then accordingly you are able to use that and see how it is kind of translating into the actual management of the portfolio, which is reflective on the returns of the portfolio, right? So it is a combination. There's no right question of one size fits all. But I guess, again, it is more about if you look at the track record and if you look at how it is spanned out, it will be very clearly visible of who is able to give you that alpha.
Okay, 2 quick questions before we wrap up the show. One is, what is your biggest investment advice to all the viewers or people who are watching you right now?
So first, I think what I have learned is just be systematic in your investment. I think that's the biggest advice that I have taken and I would like to leave people with. Do not try to accumulate cash flows and wait for that one big opportunity either ways. It is important to kind of not try and time the market, because no one has ever really made return consistently timing the market. A lot of times the sentiments are in the short term looking like big events. But if you look at a long-term chart, they are very, very small blips. And eventually, if the country is doing well and you are looking at the progress and you have seen the kind of returns that it has been multiplying, the fact that you're disciplined, you're systematic, will take care of a lot of things for yourself. Okay,
so be disciplined. And my final question, which is always on my mind, how do you manage or balance motherhood and work?
So yeah, it's a combination, right? If you're passionate about what you do, you will make time for it. It is not just about work in a corporate culture or anywhere else. It's the same thing with motherhood. All of us are passionate about our family. We will make that time. So it is about ensuring that that quality time is available, you prioritize properly, and you learn from your mistakes. It's not that you're always right. There are times when you go through those ups and downs, but you learn and you move on and really don't keep that hanging up and make you feel guilty.
Honestly, can you have it all?
I think you can. It's all in your mind. And I mean, at the end of the day, right, it is about how much guilt do you want to... sorry, can we do that?
Yeah, go ahead. So can you have it all?
I guess you can. It's easily said, but I have felt that I've always had it all.
Okay.
Touch wood for that. But I guess it is finally about...
How you manage your guilt.
How you manage your guilt. Very, very well done. Right? Because this is something that as women, we feel that you want to be the best in everything you do. And then you're always running after that guilt of not being that superwoman. I always feel we are human beings at the end of the day. Certain things could be good, certain things could be bad. It's perfectly okay. Your children understand, your family understands, people around you understand. We are hard on ourselves.
Yes. So don't be so hard on yourself.
Absolutely.
You cannot be everywhere all the time, right?
You need not be everywhere all the time.
You need not be everywhere all the time.
It's okay.
All right. On that note, thank you so much, Ayshwarya. It was a pleasure speaking to you, learning so much from you, and all the best. You've completed over 2 decades in your career, and I hope you have many, many more successful decades to go.
Thank you. Thank you so much, Sonia. It's wonderful being here, and thank you for having me.
Okay. And to all you viewers, thanks a lot for watching. Keep writing to us. We love receiving feedback from you. Have a great weekend.